Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. We've made it to the end of another week. How are you doing today?
Happy Friday, doing great. And, we did it again. It's kind of amazing. I mean, yours is blue and white, but mine's light blue, but it looks light blue. Mine looks like light blue. Just real quick reveal. So I went with green today. We're in need of green candles. And I have the roller coaster, Bitcoin roller coaster sock game. It is the end of summer, so it's still roller coaster. And, we're in one of the drops here, but hold on tight. And I think we'll be back up on the track here soon. I guess the one warning is September seasonally is the worst month for Bitcoin.
Right.
So, that's not necessarily a prediction. It just happens to be in the 17 years of Bitcoin's life. Septembers have not been kind. But that always leads to my favorite term, Uptober.
Oh, yeah.
I call it.
Rectober in October.
Yep. So we'll see how that plays out. But if you look at broader markets, I'm a little nervous. I mean, today, actually, we're recording on Friday. This is the biggest options expiration ever.
Wow.
And it's because the number of individuals using options, and particularly like short-term options, it's literally gone parabolic. And that's totally gambling, right? A 24-hour option is like literally betting on red or black, not investing at all. But so I'm nervous about broad markets. They say, right, sell in May and go away and don't come back till St. Ledger Day, Labor Day. This year it didn't go, it went the opposite way, right? We've been in this melt up all summer. And I do worry that when people come back from the beach, when people come back from vacation, they're going to look and go, wow, okay, I need to sell some stuff. So we'll see. But
yeah. So to your point, Mark, I mean, that on that options piece, I think as of I think maybe next week, we should sort of see what happens. Actually, exactly 1 week from now, on the 29th, you've got 13.8 billion worth of Bitcoin options set to expire. And really, Mark, we won't have to wait, in my opinion, that long to figure out if we're going to have the Rectember or, something a little bit more in between. Because, in the end, it's really highlighting this tension between the buyers and sellers defending their positions. Right now, you have periods where people are taking out some of their gains, right? And we saw that, nearly 200 million in outflows just for ETH alone on Monday. And that was, kind of the second worst day ever. And BTC shed 121 million. I think I want to confess up front at the start of the show, Mark, one chart crime that we sometimes see is spoken, right? Which is this idea that ETH has been outpacing both Bitcoin in inflows and outflows for the last couple of weeks now. And while that is true, the scale and the magnitude of the base is something you have to seriously consider, right? So the reason for that is I think we've reached a point, at least for now, that Bitcoin, you're not going to see in a short trajectory a huge inflow into Bitcoin like you saw with ETH when you have this kind of landmark registration. Of course, never say never. You can have an executive order come in, executive order. But we had a great show yesterday, Mark, that we'll encourage folks to listen to. Great participation. Looks like folks had some keen interest about, this alt season, because it really has this genesis about, obviously Bitcoin is a thing that has been, meteoric and also has been relatively stable, I might add, because once we crossed the 100K, we've sort of stayed there in the teens, flirted with the 123, 124 numbers, and have kind of shed a little bit of the gains. And then this is where I love this, Mark, and to hear your opinion about this. I know that Bitcoin is here to stay and also is a bear asset when we're trying to continue to put macro excuses to define Bitcoin's success or failure, right?
Right.
Well, oh, Bitcoin's down because people took in gains, or there's tensions in, some part of the world. And so, that's kind of spooking in investors, mixed jobs report. So I think this is a good thing because it's moved away from a speculative asset and it's sort of in the mix, so to speak. But I think in the end, folks really were curious about what was going on in the alt season. There's a lot of movement there. And within Bitcoin, we won't have to wait, too long before we get a little bit of a preview of what might be, happening this fall.
Yeah, no, really important point there. And, for those who just can't get enough digital currents, we only record weekly, but we thank you all for listening every week. But we also do record on a monthly basis a digital show for clients and friends of Morgan Creek. And we had really great turnout for, the middle of March or end of August, end of August. And the topic was beyond Bitcoin, other digital assets spring to life. And, it's kind of a play on the whole alt season and, springing and all that good stuff. But at the end of the day, there has been a tamped down bull market this cycle in the sense that, Bitcoin dominance just kept rising over the last 3 years. And historically, that played out. So Bitcoin went up first, and then people kind of got bored of the big, and then they started to go down into other things like Ethereum and Solana and Avalanche and et cetera. And then, when people had made their money on everything, then they started really speculating and punting on the meme coins and the altcoins. And that hadn't happened this time. I mean, the Bitcoin dominance just kept going up. I mean, here's crazy. When we hit 4 billion last week and 4 trillion of total value, Bitcoin was 2.4. So Bitcoin alone was bigger than everything else put together.
That's insane.
Which is kind of amazing when you think about it, right? And so it's not that all that other stuff is bad, and it was still 1.6 trillion with a T. And there are still a whole bunch of crazy things. Like there's Pepe, right? Meme coin Pepe. Now, Pepe, everyone knows the original Pepe were the kind of the digital artifacts that kind of started the whole thing. And it's that funky, I think it's ugly frog, no accounting for taste. But the rare Pepes. And so they did a meme coin and it went like this. Well, now it's down 99.9%. Still has a $3 billion market cap. Now, let's think about that. What does that mean? Because let's think about it. So 3 billion sounds like a lot, except here's the thing. That's taking the price for the last, 100 Pepe and multiplying by the billions of Pepe that are out there. If any large holder of Pepe were to try to sell, that price would collapse even more. And we go from 99.9 to 99.99. And so this whole idea of market cap has never sat well with me.
Right.
In that, and it's true for everything, right? NVIDIA, if NVIDIA's value, 4.5 trillion, right, bigger than all the digital assets put together, is based on the price of 100 shares traded. So they take that 100 share trade price and they multiply it by the billions of outstanding shares. Well, if Jensen were to suddenly sell a bunch, the price, the value would go down. So the whole idea of market cap has always been flawed to me, but you got to do some calculation to come up with some number. But my point there is that there's a whole bunch of relics, stuff like Dogecoin and Shiba that I even put XRP in here and people get mad at me when I say that.
It's just so provocative, Mark. It's hard not to mention it.
I know, but there's no, to me, what it means is, and Cardano's another one, there's no there. And so you've got this gigantic amount that's locked up by the foundation or the founders. And then you've got this small amount, like take XRP, quote unquote, has a $200 billion market cap. In theory, that's a lot. It's a lot of money, third largest digital asset, but it only trades 1 to 2 billion a day. Not that that's not nothing, but it's the same few thousand trading over and over and over again. And it's probably hundreds of thousands, but it's just not, it's not like if suddenly the foundation wanted to sell, the price would vanish. And the price is still the same of that asset as it was in 2017. It's a crazy thought. Now people say, no, in 2016, it was a fraction of that. I'm like, well, yeah, but it had its pump, and then it had its dump, and then it had a pump, and then it had a dump, and now it's had a regulatory pump. Mm-hmm. And that's another thing that's real, and we talked about this, and people should listen, is the regulatory regime change is absolutely supportive of beyond Bitcoin, right? It's not just about Bitcoin. It's about stable coins. It's about digital asset tokenization. It's about payment rails. It's about DeFi. It's all of it now is kind of, I don't say legitimized because it never needed to be legitimized, but it's less persecuted. Let's say, under GG, it was being persecuted. And now you've got, the head of the SEC being supportive, and you've got legislation, the Genius Act. There's another great episode for people, the Genius Act. And all of that is a tailwind, but there's still a lot of building that has to happen. And I think if you focus your time and attention on the builders, the people who have development activity, product activity, things that you can use, that you and I can use. I mean, if I want to send somebody a stable coin, I'm using USDC. Why? Well, because I'm in the US and they don't like Tether very much, so I'm not using Tether. USDC is super easy, super cheap. Super efficient. Well, why don't you use, XRP's stablecoin? I don't even know where I could get it. So I know where I can get USDC. I know how to send it. I know how to use it. Super easy. Now, there are people doing remittances who are using other things. They're using Dash or Monero or other things. But those altcoins, I guess, those alt projects, those alt ecosystems, and that's the key point, is the ecosystem and the development activity. If you find things that are making inroads, like real progress, I think they're going to be good, really good.
Yeah. And to the broader point, Mark, that we were kind of talking about before, I'm sure you saw this headline from Bloomberg this morning in your newsfeed, which is a very provocative one I had to click on. Bitcoin volatility collapse forces risk-loving traders elsewhere. I mean, what world do we live in with that headline? So they go on to say Bitcoin is showing signs of maturity as its wild swings fade, and the volatility dropped from close to 200% more than a decade ago to 38%. And do you know what that kind of peer group looks like at 38%? You've got some very well-known companies that we love, like Starbucks and Goldman Sachs. And so the idea that in August, to the point of inflows and outflows, now some of these traders that are looking for the swing, they have added 2.5 billion to ETH ETFs compared with 1.3 billion outflows of BTC. So what this kind of argument is trying to posit is, first of all, I just love that idea that, that Bitcoin is now not risky enough for people.
Oh, it's stodgy. Oh, it's so yesterday. It's so stodgy.
Exactly.
It's like a boomer coin. It's a boomer coin.
From Bloomberg, Mark. This is not from Cointelegraph or, Decrypt or some of the kind of classic sites that we go to. This is folks that are on their Bloomberg terminal that are reading this stuff that have already kind of accepted that they have their, 1 to 5% on Bitcoin, and they're looking for kind of that next wave. So, when you have that, it's this idea that Ethereum is moving into like a risk-off sentiment, right? And so you get some concerns that, you can't rule out some things like a short squeeze. But for now, you have some folks that are maybe preparing for a pullback. But the idea is that while it's been quiet, Bitcoin has been the steady anchor, and ETH is where the volatility lives. And you couldn't say that before, Mark, because ETH wasn't volatile because it was just almost dead. It was pretty fucked.
Oh my gosh. And that's the point, right? Is it was almost dead. I mean, it was, here's the crazy thing. So it's essentially the same price as it was a year ago. But in that year, it fell from 4,000 to 1,500, 1,500. Okay, that's a big fall. Mm-hmm. And it was basically left for dead, right? People were saying, oh, does it even need to exist? No one's going to use it. They're all going to go to Solana and Sui. And then suddenly, the Genius Act comes along and Circle goes public, and people say, most of these stable coins are on Ethereum and they're using ERC20, and that's probably not going to change. So they're for some value. So it trebles. I mean, it goes up 3x from 1,500 to 4,500 before it gave back a little bit. And so it's quote unquote volatile, and volatility attracts attention, and everybody's all excited and like, well, okay, but it's still not at a new all-time high from 2017, whereas Bitcoin is much, much higher. So what does that mean? Well, the issue for Ethereum is it isn't a monetary asset, store of value, digital gold, right? There were people who were trying to make it that years ago, and it's just not. It doesn't make it bad, but it's just not that. Bitcoin is that. So Bitcoin has this steady ascent kind of built in as we devalue fiat everywhere in the world. I mean, it's crazy how bad the devaluation is, and the deficit spending and all that. So that's a great tailwind for just Bitcoin as this store of value. Ethereum is different. Ethereum is this global computer, right? It's a better system. I mean, smart contracts are a superior way of moving and storing things of value. But there are some limitations, proof of stake versus proof of work. That is a interesting dynamic. Wednesday this week was the 17th anniversary of the original email from Satoshi to Adam Back, basically asking his permission to cite Adam's work on essentially creating proof of work using hashing to establish truth on a blockchain. And it's really an amazing email. And if you haven't read it, you should read it. There's only 3 paragraphs.
Or go into our archives and hear from the man himself, where we had Adam Back on this podcast.
That's right.
And he was speaking about, how crazy of a time that was. And of course, we asked him, Mark, as we always do, is he Satoshi, or does he know who Satoshi is? We didn't get much of a clarifying answer, or didn't we? Check in the podcast.
That's right. Or did we? That's right. And he could have definitely been sending an email to himself. So that's an interesting theory. So what's interesting about that, though, is, Bitcoin as proof of work, and why proof of work is so important, and why everything in the world really is proof of work, right? How do you get paid for your job? You prove that you did work, right? How do you get paid for creating a piece of art? You prove that you did work. You created a piece of art, or you provided a service, or you exchanged a good. So pretty much life is converting energy to value. that's what all of us do. We're trying to do it right now. We fuel up our body. We try to create some value every Friday. And that is an interesting thing. So, but the technology of being able to transfer value anywhere in the world instantaneously at almost no cost using a stable coin, it's pretty amazing. And if you think about payment rails, like to this day, I still use most of the time, I'll use it this afternoon when I take some guys to lunch, a credit card. Mm-hmm. And I pay, I don't see it, but I pay 3%. I say, oh, no, the company pays it. I'm like, well, yeah, but they just raised my price 3%. So, but I pay 3% for the convenience of not carrying around paper money. And if I used my digital wallet with stablecoins, I wouldn't pay 3%. And yet I don't do that yet because the point of sale terminals don't all accept it. But that's going to happen eventually.
And that's a good transition, Mark, because I think that when we looked at what the broader market and ecosystem is setting up to do, so we saw Circle begin to stumble a little bit, but I think this might be short-lived. So their stock dipped 5% because they announced the acquisition of Informal Systems, the high consensus engine, Malachite. And that's to power their layer 1 blockchain. So I think this is interesting, right? So the idea here is that they're developing their own layer 1 aimed at stablecoin finance. So the very thing that you're mentioning about, the convenience of using plastic money versus paper money, and then the fee associated with that, I think ultimately what's going to happen is there are going to be some stablecoin winners and losers. Those are going to be regionally defined. Circle now is going to ultimately become a bank in everything but name only. And they're going to start to increase the fees that are associated with that convenience. It's got to be somewhere between 0 and 3, because at 0, you don't have a business, and 3, you are just, table stakes with everybody else. But I think that, what this may circle here, and it's no pun intended, is that there will be this kind of changing of the guard. And we speak about this a lot. We had a lot of time to think about this, Mark, because there wasn't that many IPOs the last couple of years who would say, is this revolution going to be for the legacy banks that are going to bring in this technology? Is Jamie Dimon coin finally going to become a thing with Onyx? No, they kind of fell asleep at the wheel, and they let these kind of new kids on the block, like the Circles of the world, become the innovators. And also they became in some ways the folks that were the easy victims and the easy people to blame when there were problems. And that's, why they get so much of an opportunity for this upsurge. But I think, Mark, we also spent a good amount of time speaking about, Circle, both the pros and the cons. We have some portfolio companies that are working with them, like Alfred, to expand their moat, because Circle's very U.S. focused. And, most of our listeners from the U.S., so we're familiar with them. But outside of the U.S., you're looking at UST, you're looking at Tether as a way to power stablecoins as well as other chains. But if they develop a strong layer 1, maybe, Mark, they could become like an Ethereum killer. I feel like if I had $1 for every time I heard the word Ethereum killer, I would be rich, almost as rich as when I hear Bitcoin killer. So it's, the Family Feud, the second highest category was ETH killer. But the idea here is that if you can kind of get a lot of users, you can create this big infrastructure, then you can have the push effect of having other chains and other ecosystems work with you. And so to your point of going to the restaurant, and then now, would you be willing to pay a fee for convenience and security? And have it be less than 3, half? Maybe they could do something like a blended average. We'll hard.
100% I would pay for that. Yeah, 100% I would pay for the convenience factor. And the other thing is, there's a difference between a debit card and a credit card, right? Debit card, you actually have to have money in your account to take it out.
The hard part
is why we all got kind of addicted to credit cards. Is I get to batch my transactions for a month, so I don't have to have any money in my account for a month. And then if I have enough money to pay it, I pay the bill. And there was a time in my life where, I was borrowing from one credit card to put on another credit card. That was part of being young and just working my ass off to get ahead. And so there was an advantage, but I was paying huge interest rates but it was what it was. But there was a usefulness in, I would say it's like when I bought my first house and I needed furniture. I didn't have any money. And so I financed it because, oh my God, it's a depreciating asset. I'm like, yeah, but I get to use it. I don't have to sit on the floor. And I'm happy to pay, more than it costs to have the utility. And the same thing is going to happen here is you could have a stable coin card, so to speak, digital. And yeah, we'll get the cost down to 0.5% or 1% instead of, 2 or 3. And yet I can batch those transactions and even pay interest. And what a great business. And now I would like to see, hopefully, in a Bitcoin standard world where we get rid of this notion of inflation stealing our wealth by 4% every year. So we don't have to charge 17, 18, 20% or usurious rates for credit cards. So maybe it could be in a Bitcoin accretion world, could we have a 5, 8, 10% rate? Sure. Yeah. I think that, and so, but why do we need any? I go, because there's utility in being able to get capital in advance of when you have it.
Right. Well,
Yes, it is. And people say, well, what if I pay off my card of it? Then you don't pay any interest. I mean, if you have the luxury of having enough money to pay it off every month, then you don't pay interest. But for those, again, I lived it, I know it, and I that those experiences, right, they make you better, right? You struggle through, do what's hard, the whole thing. Speaking of doing what's hard, one little plug. So I saw this amazing chart yesterday, X, that if you lift weights, okay, the age difference, the people who both life expectancy and the age you feel starts to diverge like unbelievably. And it's just like, just go lift weights every day. And do a lot, but just do something. And then I saw this video of this I think it's Japanese. I didn't have the audio on, so I wasn't sure if it was Japanese, but I'm pretty sure it's Japanese. But this guy is like 72, 73, looks 35. Now, he's worked out supposedly every day for 34 years. That's pretty amazing. And I don't work out every day, but I've been better. But
we've seen the push-up challenges, that were very impressive.
So anyway, but there's just a simple thing about do what's hard. Right.
Absolutely. I have that, as you know, Mark, I'm a great student and admirer of history in my gym, which was the best thing. If you can have a gym or a space in your home and reduce the friction so that you can increase your activity, do it. So I've got my JFK moon poster, which I love, that says, we choose in this decade to go to the moon and do other hard things, not because they are easy, but because they are hard.
Oh, love it.
I love that because it really gets me going. It really lets us know, to the point you mentioned earlier, why we're here. We're converting the things that we take into our lives and into our bodies, into energy and into value for those around us. And that's not an easy thing. And, kind of an interesting transition here, Mark. We got into the conversation briefly last week about bullish. And, there are going to be some IPOs. And I think sometimes it is worthy to take a slight step back and kind of cover it a little bit after the fact, because there's so much settling that happens. So, there was an amazing headline, a 200% first day surge, a 50% drop in a week, the ice and fire of the bullish IPO from O Daily News. And I think that's just a really great depiction of what's happening in our market now. And of course, one thing that, kind of blends the two ideas together, Mark, is that bullish also made history, and not just for, the obvious reasons of their listing, because they received over $1 billion of their IPO proceeds in stablecoin, mostly minted on Solana. So this is really showing the intersection of these two systems. And of course, we have this as a backdrop, Mark, because our very own Figure has created a ticker for NASDAQ on their upcoming IPO. I think it's perfectly apt. FIGR, phonetically sounding as Figure. And so, we're expecting some good things here, because I think, this is a company, Figure, and many of the ones that are going public now that maybe 2 years ago, certainly last year, had their reservations about, coming out of the private market and going public. And in some ways, they were very good companies back then. They could have probably figured it out in better environments. And now, these companies are coming to market because there's a greater receptivity. We have been clamoring for this for a while. Is 2025 the new 2021? We had a good episode last summer, and we're seeing some shades of that, but there's enough of a difference here. So Mark, we got a couple of themes with like the broader market and bullish doing some kind of bullish things, and Figure now finally in a position to reap benefits here.
Yeah, look, I mean, what we're seeing is, not the culmination, because that implies end, but
the coronation.
The coronation, yeah. Well, it's a continuation,
right?
Of the digitization of financial services, and we've, the reason we came here in 2017, 18 was that we saw, this digital gold rush, this opportunity that blockchain technology was going to do to financial services what the internet did to media and commerce. It revolutionized and liberated capital and made the world more efficient. I mean, think about, how you get stuff today it's just way easier and way less friction than it used to be, because e-commerce is pretty amazing. So I look at financial services, which is, again, the largest industry in the world, and it's not close, right? It's bigger than media, it's bigger than telecom, it's bigger than computing, it's just bigger than everything. And what blockchains do is they allow us to do what financial services do. Financial services companies allow you to exchange value, but they act as an intermediary and a custodian and a safekeeper and a referee. Well, all of those things cost money, and that's $7 trillion of tax. It's the revenue for those companies like JP Morgan. That gets liberated in this world. And so companies like Figure and companies like Gemini and companies like Coinbase and companies like Bullish, they're taking the old models, the UBS, the Credit Suisse, the JP Morgan, et cetera, and they're saying, you know what? We can do this better, faster, cheaper, no different than I used to pay a travel agent real money to make an airplane ticket booking, because it was complicated in Sabre system. It was internal. You couldn't touch it if you weren't a travel agent.
Right.
These moats. Well, now, I sit at a traffic light and I can buy a plane ticket in 90 seconds. That's a better system, and it's cheaper and it's more efficient, and that is happening. And so as we think about, Figure, they became the largest non-bank real estate lender in the country in a matter of years, not decades or centuries, but in a matter of years. And now they're moving into other segments where digital assets and the marketplaces for digital assets, like, for example, if I said, well, I have some excess liquidity, I want to put it to work, and you say, well, I need a home equity line of credit and I'm willing to pay, 11% interest. I'm like, 11%? That sounds good. Okay, X, here's some money. Mm-hmm. Well, you can't do that because I don't have enough. You need 200 grand and I got 10K. Mm-hmm. Well, if 20 of us put in 10K, suddenly you get your HELOC And that democratization, and Figure even calls it democratized prime, that democratization of prime lending is pretty amazing. And it's only allowed by this technology that is now going to be ubiquitous. And when we step back for a second and look at whether it's bullish, which bullish is still pretty small. I mean, they got a great CEO, came from ICE, and he's fantastic, rock star, but their volumes are not huge yet. They have a big asset in that they were endowed with, I think it's 24,000 Bitcoin, back when Bitcoin was pretty low. Now Bitcoin's pretty high. Their treasury, even though they didn't intend to become a Bitcoin treasury company, they are, I think, number 4, number 5 now on the list. In fact, bumped my little MetaPlanet down one notch when everybody realized how big they are. But that process is just going to keep going. And these types of, because right after Figure goes, Gemini is going to go public. And well, why? And then, well, because this need for exchanges, platforms, trusted, I think the twins have a trusted reputation, right? They stand up for things. They fight back. They fought and won against the New York AG, all kinds of stuff. And I think more and more of these types of companies, remittance companies, payments companies, and I don't know if anyone I saw the picture of the original. It's Peter Thiel and Elon. Elon when he's bald and he looks like he's 14. And when they started PayPal. And what people forget about PayPal, right, is there was a merger of 2 companies. There were 6 young guys. Only people I ever hear of are Elon and Peter Thiel. Well, there were 4 other guys. Now, I think it was 3 on each side, and one guy got ousted, and then the other guys kind of got bought out, and so there's some intrigue, and there's some lawsuits, and so it might not have survived, but it did. And then the mafia, right? Which is, you got the Kleiner Perkins mafia and the Sequoia mafia, and you got, the Cisco mafia or the Microsoft mafia. The PayPal mafia, very successful in doing a lot of other things. And, now we got other businesses like Palantir's topic for another day. But that system, right, of going from analog transfers where you had to go into the bank and do a wire transfer to PayPal, where you could have on your phone and take someone's QR code and send them some cash, or Venmo. Those were interesting transitions, but now we're going to make an even more interesting, I think, more interesting transition into the world of digital exchange. And will there then be, will there be a Coinbase mafia or a, Circle mafia? Certainly. And those people will, and we already see it with Coinbase, right? Fred and others have left Coinbase and done amazing things. So it's cool.
Yeah, and we've seen that with our very own Figure and the SoFi mafia, which a lot of those teams have left, and we congratulate Mike on his second go around. Joining a very elite club of folks that have taken multiple companies public and been at the top helm. So now, of course, Mark, we get to the point of our show where we make it a little bit interactive. We use the other side of our brains for a little bit of chart analysis, the chart of the week, where I always remind folks to continue checking this out on YouTube. The engagement there has been awesome. And I want to do a little bit of 3D chess, an idea of bringing together some of the topics that we've discussed. So the other week, we spoke a little bit about the idea of hash rate and why that's something that's important, and how basically now we're looking at financial tools we've increasingly looked at financial tools to look at crypto markets. They're kind of now almost indistinguishable in my mind. And so, we have an idea of tracking Bitcoin volatility over time and specifically looking at the mining revenues, because I think that really underpins the entire system.
Yep.
And so I wanted to kind of show the latest hash price index, which is kind of, showing, it's a term that was coined by Luxor, and it basically like shows the expected value of hashing power per day. And so the idea is that like, if you can have, the network difficulty at a certain level, higher or lower, you might be able to predict a better time to go in and out of markets. So I have that as kind of the first dimension. And then kind of the third dimension is comparing Bitcoin and ETH and kind of looking at how wide that spread is. So the idea is, how do we evaluate both of those? So Mark, that was a huge setup so that we can kind of look into the chart a little bit more clearly. We'll have a twofer today. So this is the first one. And so folks that kind of checked this out last week, this is kind of showing what I think is pretty dramatic, Mark, in terms of how big this is. Almost not quite a chart crime, but in terms of how big these scales are, it's still in the hundreds. It's not in the thousands. The time scale is over 5 years, where it's showing that it is a totally different market now than it once was. This is you can credit the ETFs for this, and what this kind of represents in how we can set it up for ETH is a different point and a different category of an investor. So Mark, I want some quick comments about this, and then I can kind of segue into the other discussion we had about that large separation between ETH and Bitcoin, and maybe why people are saying that Bitcoin is no longer volatile, which is a crazy idea.
Well, no, I think look,
less volatile.
Volatility is one of the most misunderstood things. One, it's just a hard mathematical calculation. I mean, it's not impossible, but it's tough. The average person just not very, very good at it, like most statistics. And the second thing is, it was demonized in the post Markowitz world. So Markowitz, came up with this concept of, capital asset pricing model and used volatility as an indicator of risk. So volatility became synonymous with risk. And when you actually think about it, you're like, well, wait a second. Why is it risky if I do better than average, right? If I have positive volatility? Well, it's actually not. What's risky is if you have negative volatility. So, deviation from the mean to the downside. That's a concept called semivariance. And so there was this discussion in, amongst people, 20 years ago that, well, shouldn't we really think about semivariance, not variance as true risk? And yeah, that makes sense. So I actually was lucky. I got to sit next to Dr. Markowitz at a dinner, 20 years ago, the Goldman Sachs was holding. And so I got to ask him. I said, Dr. Markowitz, it's been said that perhaps, you should have used semivariance instead of variance. And he says, well, of course, but the math would have been too hard and I wouldn't have got the Nobel Prize. And I needed that $1 million. So oh my gosh. And so the whole idea that volatility is bad is just wrong. And all volatility really is disagreement on a future state. And the simplest example is a treasury. You buy a treasury, there is no volatility, right? It's flatline volatility and you make a very low return because there's no disagreement as to whether the government's going to pay you in 90 days. It's never defaulted. It's, people just believe it's not going to default. So there's no volatility. If you buy Amazon stock, there's actually lots of volatility still to this day. 80 vol every year. It has a double-digit drawdown, and that is because there are still people to this day that think e-commerce is a fad, or someone else will come in and compete with them, or their AI really isn't that good. Their AI, it's like the only real use of AI so far that I've seen that's real. I mean, there's like this survey released, McKinsey or somebody said like 87% or 89% of companies saw no productivity improvement from the use of AI. That was a big.
I saw that, Mark. Yeah, that's right. That's wild, and it kind of goes against so many of the things that we were thinking about, right? Because it's supposed to save us all and be this panacea. And as I can swap in the other chart here and kind of show the spread here. So this is where the third dimension comes in. So if we look at the idea that mining is becoming less profitable over time, what does that for the average miner? What does that mean for seeking value? So if we kind of posit the ETH Bitcoin volatility spread, the widest since 2019. So on the top, for those that are on audio only, check us out with YouTube. On the top, you've got kind of the raw numbers, and the bottom, you've got the kind of blue line representing what does that actual spread look like. So we've got what about 25% or 250 basis points of the very big.
No, it's amazing. And it's because, again, there's not universal, but approaching universal agreement that, Bitcoin is here to stay. I mean, there's still a handful of people, Ken Rogoff, doubled down. I'm not wrong. The world is wrong. I'm like, why would you even say that? That's just, it just sounds like, it's like when people lose money in the market and they say, I'm right, the market's wrong. No, the market's always right. And the world, the consensus eventually on facts like this is just right. If people want to say, well, the automobile will never be a thing. Well, no, it's kind of a thing. And if you're in the buggy whip manufacturer, you're kind of unhappy. So the point is Bitcoin adoption, it's here. Its use case is clear. How dominant it becomes, there's still some question about that. And if, how ubiquitous it becomes, there's still some question about that. But at the end of the day, it's here and it's not going away.
And it points to like a really recent trend, right, Mark? Because for a long time, and I love this because this is looking at us almost for as long as Morgan Creek Digital has been around. A little bit later was 2018. But the idea that like we would look at the gains in Bitcoin, and usually when Bitcoin would gain, ETH would gain.
Yes.
And they would kind of move in a similar kind of pattern. But that's been a little bit divergent, and you can see it got squashed at different periods. And now they have really begun to separate, at least in this short term.
Well, and this separation is important. It's because, remember, I said volatility is an indicator of disagreement about future state. So in 2023, you see that red line dip down very dramatically, 22, 23, where the volatility in Ethereum basically died, just like Bitcoin's. Well, it was because we had pretty common consensus that ETH is kind of done. Right? Everyone was convinced it's kind of done, and it's going to be replaced by Solana and Sui and everything else, because those are faster and cheaper. I even asked the question on this show, right? If ETH was created today, would anybody use it? Right? And I think the answer is no, but that's not the point. It wasn't created today. It was created before, and there's all this tech debt, right? There's all this installed base. And if you have a stable coin that runs on ERC20 and it's got $67 billion in it, you're not going to rework the software to go to Solana. You're just not. Now, if you're issuing a new one, you might use Solana. So what this big spike up is in 24 is suddenly, in 24 and 25, is suddenly people are like, maybe I don't understand ETH's full potential. Maybe those guys are right. Maybe maybe there's some other use cases. ETH Treasury company. I hadn't thought about that. What if people just start buying ETH and taking it off the market and locking it up? Okay. So that disagreement about the future, disagreement doesn't necessarily mean negative, right? We all think, if you're disagreeable, that's negative. Well, disagreement can just be dialogue and debate in search of truth, right? The old Jesuit, mindset, which is everything in life should be about dialogue and debate in search of truth, right? We should always be questioning what we know to be true. We should be questioning what we think is possible. And that's how progress happens. And so I think this is actually a really, really good thing for Ethereum in that, look, there are drawbacks. I said, I'm not a fan of proof of stake. I think it has the potential to be abused, kind of like the fiat system. Those who have the gold make the rules. I don't like that world. I like more neutral worlds like Bitcoin, where the nodes win, the majority wins, and that's a better system. So lots of stuff here, but I think it's a cool analysis and a good thing to have, again, dialogue, debate, and search truth.
It's just letting some folks on the outside that watch our show, let them know how we at Morgan Creek think about these markets, and as we think about some of these gaps, they ultimately affect our decisions. We get questions about, do you believe in treasury companies as far as an investment mandate? Well, it depends. We have a certain kind of guidelines that we look for. We have made plenty of mistakes, but I think the idea is that if you kind of zoom out a little bit, you can see some of these trends. And I think, Mark, probably a parting word. College football is back this week. I know we are huge fans. It's back, of course, where it all began in Ireland, right? The birthplace of college.
My birthplace. Still don't understand. Well, it's funny because Notre Dame has played in that three times.
Right.
We always played Navy, and it's actually, I went the first time. And it's a really cool experience because, they have a hurling match.
Wow.
In the stadium first, and people are like, what is hurling? I mean, look it up. It's basically you use a wooden club. It's like a paddle / club and a rock. and you take these full swings to hit the rock, and then people catch it, and then it's like a cross between highlight and polo and field hockey and lacrosse. It's a crazy sport, and rugby, because there's massive hitting, but that's kind of fun to watch. And then you see a bunch of people who don't see American football very often come watch, and plus Ireland is awesome, and Guinness
tastes different.
Ireland, Guinness in Dublin. There's no word to describe how good it is relative to Guinness everywhere else. So.
Well said. And that's probably the best point we can conclude on, and enjoy the start of our favorite season, the college football season. And so, as always, we'll remind our listeners to rate, review, and subscribe, and to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.